Good evening, friends. Myself, CA Chawla, welcome you all in this today webinar on challenges arising in taxing the digital economy. And today we are very honored to have with us very senior chartered accountant, CA Aseem Chawla ji, to speak on this subject. I welcome you, CA Aseem Chawla ji. Also, we are very honored to have CA Sunil Gargi, a very prominent chartered accountant and very famous on TV media on our panel. Welcome, CA Sunil Gargi. So, friends, I want to tell about our today speaker's profile. CA Aseem Chawla ji is a practicing ASC legal solicitor and advocate in New Delhi. Aseem ji is a member of Bar Council of India and fellow chartered accountant and certificate holder of comparative tax policy and administration from Harvard Kennedy School. He is a candidate for the prestigious Vienna certificate in double taxation treaties under auspices of UW Vienna University of Economics and Business, Austria. He is a certificate holder from National Insurance Academy, Pune, for participation in the orientation program for independent directors for general insurance companies in February 2020. Aseem ji has extensive experience in advising on a variety of tax matters, including international tax, inbound and outbound investment structure, and cross-border tax issues, corporate and business advisory, exchange control, and regulatory and money laundering laws. He is a accelerated trust and estate practitioner and member of Society of Trust and Estate Practitioner, STEP UK. Aseem ji is a well regarded for estate planning, inheritance and family governance, trust and private client, including national and international clients, high net worth individuals, and trustees and family offices. Aseem ji is also visiting associate professor with the Institute of Chartered Accountants of India on economic offences and money laundering laws. He is regularly invited to address various domestic and international forums and industry bodies. He is actively involved in leadership capabilities of various professional associations and industry chambers. Aseem ji is the vice chair of the South Asia, Oceania and India Committee section of International Law, American Bar Association. He has also been elected as the Vice President of Society of Indian Law Firms, SILF. Recently, he has been nominated as co-chairman of the Corporate Affairs Committee of PhD Chamber of Commerce and Industry. He is outgoing secretary of the Taxes Committee of the International Bar Association, IBA, and vice chairman of the Tax Force for Legal Services of the Confederation of Indian Industry, CII. Aseem ji is the chairman of Financial Services and Taxation Committee of the Indo-American Chamber of Commerce. Aseem ji is consistently adjusting over the years as one of the leading tax experts in Asia Pacific region by Chamber of and Partners Legal 500, who legal Asia law leading lawyer. His views are often sought on contemporary tax and policy matters by the print and electronic media. He also has several authorship of his credits. Aseem ji is nominated by the Ministry of Finance, Government of India, as non-executive independent director on board of one of the largest state-owned general insurance company. He is on the board of governance of a business school in the National Capital Region, New Delhi. He is an honorary capacity actor as financial and tax advisor of a leading pan-India not-for-profit organization, which is celebrating its century foundation year and 100th year of establishment. So we are very honored to have C. Aseem Chawla ji as a speaker in this our webinar. Thank you, Aseem ji, for joining us. Now I request C. Sunil Gargi, our panelist, to speak about today topic on challenges arising in taxation, the digital economy. C. Sunil Gargi. I think his connection is poor. There is some. CA Sunil Garji, please.
Raji, are you able to hear me?
Yes, you please continue.
Okay. Sorry, my connection was disturbed. Okay, friends, welcome to this today webinar. We have a very eminent speaker, as Raji has introduced, about Shri Aseem Chawla ji. No words are required to describe his knowledge and wisdom, but to introduce the topic. Today topic is very interested, friends. As you know, business profits of a non-resident are being taxed at if he or if that enterprise has a permanent establishment in that country. This is the general rule of taxation in case of business profit. But what happened about these digital companies? As they do not have any permanent establishment in any country, server is somewhere else, downloading is somewhere else, and the government brought a rule of specific economic presence. As you know, SEP rule, they could not be implemented due to the DTA provisions were not in place, and BAP's action plan, they are doing on it, they are working on it. But in the meantime, a lot of governments now have started the taxing these digital economy, digital taxation. And one such method was levying equalization levy, which was brought by the Finance Act 2016. And earlier, this levy was levied only on the advertisement business. But this Finance Act 2020 again has brought a proper tax, digital taxation as equalization levy 2020. But now there is a confusion, and Asimji will certainly will explain it and will throw light on it. Now, what is the difference between 194O and the so-called Google tax? We are very confused, sir. 194O कहाँ लगेगा, वो किस पर लगेगा, और equalization levy में क्या है? As you know, there is a debate throughout the world. When the Macron, honorable president of France, has brought that Google tax, and President Trump has threatened him how you can brought these kind of taxes. Now the India, and certainly there was a pressure. Aseem ji might know well better than me. There was pressure on the Indian government also when they brought this equalization levy. But now these digital companies have started paying taxes, and this is a core area. Friends, I will suggest you to read to have more session of Aseem Chawla ji, and this is going to be a very good area of practice for the young professionals. Take my words, in the next 5 years, the whole kind of practice, the whole chapter of practice for the chartered accountant is going to change. If you have keen interest, you can have interest in this international taxation. And I think no person better than Aseem ji can explain these things. So Aseem ji, over to you. And please, ये सिग्निफिकेंट एससीपी क्या है, गूगल टैक्स क्या है जो हम सुनते हैं, और 194 ओ में और इक्वेशन ए में क्या फर्क है, ये तरह आज बताइए प्लीज. थैंक यू. ओवर टू असीम चावला जी.
Thank you, Sunil ji. Always a pleasure interacting with yourselves and for your insightful and very precise thoughts, if I were to say. Rajji, thank you once again. The year is coming to an end, and I must thank you for all the encouragement given to us, for us to be able to share our views with the entire fraternity through your platform, and having been able to consistently interact on variety of tax and other topics. I'm sure in year 2021, as Sunilji has already set the tone, hopefully with your patronage, we will get an opportunity, especially to do justice with this topic of international eminence. And I was telling my colleague Pulkit, who's helped once again in putting together the second part, which is the today's part of the digital taxation presentation, as to the fact that 2021 will see the dogfight amongst all countries with regard to their share of taxation. As Sunilji has rightly said, that where the server is, who is rendering service, where the service is being consumed, who is paying for it, it is all in thin air and in abstract. And the traditional rules of source, nexus, etc., are being rewritten as we speak. I mean, we were very fortunate on 22nd to have gone through the entire international tax policy development and how the world is moving ahead. We have the OECD, we have the United Nations, we have Saudi Arabia looking at virtual PE tax, we have Israel and India have introduced SEP, we have the OI DR services being introduced by virtue of indirect tax framework. I mean, my colleague Sarthak has helped in putting few slides on that, which we will hopefully discuss. Then we have countries like Hungary, which have imposed taxes on advertisement, and then India has also imposed equalization levy. In fact, we were the first country of the blocks to do so. Then we have divert profit tax DPT introduced by UK, and then we had MAAL multinational anti-avoidance legislation introduced by Australia. So we have the 2017 tax reforms of US, which we did discuss very briefly last time, pertaining to BEAT and GILTI, which were part of the Trump administration in terms of trying to disincentivize companies in being able to retain profits outside. So all this is happening, and if we have to see the world as things are panning out, I think technology and capital are chasing each other. I mean, the unicorns and the valuations of technology and technology enabled businesses are scaling new heights than ever before. I mean, take for instance an aggregator which does not have any real estate in its balance sheet is valued far more than a conventional uh, hotelier who may have some properties or some hotels in its balance sheet. I mean, you need not own cars or fleet of cars for you to be valued more than a traditional, let's say, a Avis car company or a Europa Core car company who were providing car rental services. If you are an aggregator, you are valued more, but you don't own cars, so to speak. So the rules are being changed. I mean, we've seen how capital has chased technology and how valuations have suddenly soared up. You have a case in point. Elon Musk is a poster boy or a poster child of how technology moves ahead. And I was extremely intrigued looking at one of the documentaries pertaining to SpaceX, that rockets were sent in the outer space and so much of capital got blown up. And one of the USPs of SpaceX is to bring back that rocket back and use it again for the next launch. So this is how technology is moving forward. I take the point of Garg Saab that we need to probably build on today's presentation in terms of doing more presentations or more interactions on this particular topic, which is topic for the future. And I'm sure that we will get more opportunities in the coming new year. Once again, thank you, Rajji, for the continued encouragement. And may I request very hardworking Shruti to just project the presentation, please, and we could move ahead without much ado. Yeah. So this is the second part of the series of taxation of digital economy, which we have, which is there before you. Today is completely devoted to Indian and Indian tax landscape, having done the previous round on looking at what is happening all across the world and the policy. So if we turn to the next slide, please, Shruti. Yeah. Next slide, please. Shruti, could we change the slide, please? Yeah, thank you very much. Am I audible, Rajji?
Yes, sir. Yes, sir. Please continue.
So we'll quickly look at the key developments purely in the Indian context. We all understand that in 2001 we had the high powered committee and then after 15 years we had another committee dealing with taxation of e-commerce. We'll broadly go through the same. Then of course the concept of significant economic presence, as Garg Saab was mentioning, we'll go through that. We'll also look at the new norms of profit attribution, which have been brought into the scheme of the Act, but still are not in force. We also understand that in the background, we have a CBDT 2019 paper seeking comments on profit attribution rules. We also have Rule 10 in the scheme of the Indian income tax rules, which provides for very basic guidance on profit attribution. Then we have 194.0, which was newly introduced with regard to TDS on payments by e-commerce operator to the participants. Then, of course, we have the OIDAR concept under the GST. And then we had the equalization levy, which was introduced in 2016 by way of Finance Act, and it is not part of the Income Tax Act. So for those of our young friends who have queries in and around equalization levy, please don't look at the Income Tax Act or the Bible. You should look at the Finance Act. And wide budget which was presented earlier this year, the scope of equalization levy was enhanced to include e-commerce supply or services, which and colloquially we refer to it as equalization levy 2.0. And those amendments were brought in not by finance bill, but at a later point in time. And unfortunately, we all understand that this year the finance bill was legislated without any deliberations in the parliament, and therefore the provisions relating to enhancing the scope of equalization levy were brought in uh, per se without any consultation, because this was not part of finance bill. So nobody got a chance to react on the budget as such. I hope, Rajji, the slides are visible to our participants. Okay. I take this as affirmative. So with this, let's move on to the next slide, please, and let's look at some key important milestones which have taken place in this regard. Let's come to slide 5, please. Next slide, please. Shruti, can we scroll to the next slide? Yeah, next slide, please. Next slide, please. Yeah. So, what is the Indian story with regard to e-commerce generally? Let's understand that. I mean, our market is expected to grow by 200 billion in the next coming 17-20 years. Currently, there are about 1 to 1.2 million transactions which happen per day on e-commerce. Previous slide, Shruti. Uh, in Europe, we have small and large e-commerce companies helping in providing various kinds of e-commerce, be it grofers or big basket, etc. And currently, electronics shares the majority of component with regard to uh, the activities on e-commerce, and the compounded annual growth rate is expected to be 43%. Uh, and the apparel segment is the second highest, with a share of about 31% in the total e-commerce space. And with the increase in the awareness with regard to online trading, significant investments have happened. We have Uh, we have many offline channels such as Shopper Stops and Lifestyle, which were the traditional big uh, malls or stores, have also got into the online channel. Yeah, next slide, please. Next slide, Shruti. Can we move on to the next slide, please? A slide prior to this, Shruti. Slide 6, please. Yeah, a slide prior to slide 6, please. Slide 5. Yes. So in 2016, we had the report of e-commerce under the chairmanship of the then member legislation, Mr. Akhilesh Ranjan, who's pretty much regarded as the key instrumentality or the international face of Indian tax policy. Uh, and then post the report, we had the legislation of equalization levy, and then OIDR services were also introduced during such time. 2018 was the introduction of the significant economic presence concept in the scheme of the Indian Income Tax Act, which never got enforced for the simple reason that it was said that let's look at the developments happening at the global front with regard to taxation of digital economy. And in 2020, as I said, equalization levy scope got enhanced. We had TDS under 194O. Amendments were brought to SCP by having a new version of explanation 2A. We will see the comparison between the old version and the new version. And then section 9 was further introduced by virtue of insertion of explanation 3 capital A. So these are the key developments which have taken place in the last 4 years. There is much to come. None of these developments do impact tax treaties. Equalization levy is a separate levy not forming part of the Indian Income Tax Act. So the whole question of claim of equalization levy for the purposes of tax credits under Article 23 is still a vexed issue. With this, let's move forward to the next slide, and I'll just take a quick 30-second break on some. I just need to reset the internet Wi-Fi connectivity. So I'll just take a 30-second break, and Shruti, can we just move on to the next slide, please? So we all, just to sort of help in refreshing the memory, in 2001, we had the High-Part Committee report on e-commerce, popularly known as the HPC report. And at that particular point in time, I do remember deliberating the same with Mr. Vijay Mathur, who at that time was the international face of Indian income tax department in terms of leading the international tax policy. And the e-commerce uh, committee at that time was under the chairmanship of a senior revenue officer functionary, Mr. Kanwaljit Singh. And the committee said that, well, concept of PE should be abandoned and an alternate to PE should be found. Now, this was what was said about 19 years ago, and this is exactly what has happened now by looking at alternate means of taxation. And what the High Part Committee did was to map all the 28 scenarios which were examined by the OECD in their technical advisory group report known as the TAG report. And in most of the cases, the differentiation in terms of the outcome of the analysis done by OECD and the Indian Income Tax Department was largely on account of the fact that we had the FTS fee for technical services section, which is there under the scheme of the act under section 917. And on account of the FTS provision, the outcomes of the analysis of the HPC report and the tag report of the OECD, apart from that, in most of the cases, and I can give you the statistics if required, in most of the cases or in largely the remaining cases, the outcome of the analysis of OECD tag report and the HPC was identical. So if anybody needs exact analysis of the tag report and the HPC, and I'll be more than happy to provide. Yeah, let's move forward to the next slide, please. Now coming to the 2016 report set up under the chairmanship of Mr. Ranjan. The committee in its report, in consonance with BEPS Action Plan 1, addressing the challenges of digital economy, considered all the three options to address the broader issues. First is the SEP, which was felt that it is not sufficient unless the treaty is amended, because even if you amend the domestic tax law and the treaties are not amended as they currently stand, and assuming that the prerequisites of treaty are met, then in that particular case, the treaty will triumph over domestic tax law, and therefore, even if you were to bring some amendments in the domestic tax law, they will not serve the purpose. Second was measures of withholding taxes. Again, if the treaty provides for certain withholding taxes prescription, and if those rates are better or concessional, then the taxpayer will have the option to elect the rates given in the treaty. So unless the treaties are amended, there is no point in tinkering with the withholding taxes rate under the scheme of the Indian Income Tax Act. Third was equalization levy imposed on gross basis of the transaction and not on income, and it not be an income tax, and the inherent concept of EL keeps it outside the ambit or the purview of treaty, because if it is made part of treaties, then the question of credit comes into picture and renders the source base tax prescription somewhat ineffective. So amongst the three options, equalization was considered to be an effective alternative, and the report was and therefore we find that in 2016 itself, the equalization levy found its place in the legislation and was introduced by Finance Act 2016 itself. It's part of the Finance Act, it's not part of the Income Tax Act. Yeah, next slide, please. Now next slide, please, Shruti. So before we get into the contentious talked about provisions in the form of explanation to capital A, which has been inserted to section 911 of the Act dealing with SCP, let's probably spend a minute as to what currently the scheme of the Act is all about and what is being intended to be done. On the indirect tax side, we know that we have the online information database access or retrieval OIDR services. And then we also have a provision of TCS on e-commerce transaction. This is the indirect tax basket. On the income tax side, we have Section 5 of the Income Tax Act, and Section 5 subsection 2 deals with the following income of non-resident subject to tax, which is received, deemed to received in India, income accruing or arising in India, income deemed to accrue or rise in India. And then in terms of Section 9 of the Income Tax Act, income from the following is deemed to accrue or rise in India: income from any business connection in India, any property in India, any assets in India, any source of income in India, transfer of any capital asset situated in India, right? So this is what the reach of Indian Income Tax Act has been all along, or currently as it is enacted. Now, what is being proposed? The package in front of you, and I'll just come to the explanation to capital A. Now, the package in front of us is equalization levy effective June 2016. Further enhancement of scope of equalization levy effective 1st April. The first set of equalization levy is with regard to online advertisement and related services provided to residents charged at 6%. The second package, EL 2.0, is charged at 2%. Then is the significant economic presence, which the slide is in front of you. And then income from advertisement, sale of data products. So all these measures put together are the package in front of you, which deals with taxation of digital economy under the Income Tax Act. Now, Section 9 of Income Tax Act, in cases where the non-resident does not have a business connection, leads to a deeming provision, which we will come to later. So let's now look at Section 911 of the Income Tax Act and the introduction of the whole concept of significant economic presence in terms of introduction of explanation to capital A, which is right in front of you. Yeah, let's not tinker with the slide. So what this concept is all about? Yeah, that needs to be understood. So Finance Act 2018 inserted explanation 2A, the SCP concept, which expands the scope of income deemed to accrue or rise in India to a non-resident from a business connection in India. Now, what SCP means? SCP would the concept of significant economic presence shall mean transactions in respect of any goods, services, or property, including provisions of download or data or software in India, if the aggregate of the payment arising from such transaction during the previous year exceeds the amount to be prescribed. Now, that's one limb of SCP. The other is systematic or continuous soliciting of business activities engaging in the interaction with such number of users as may be prescribed in India through digital means. So, if I am soliciting business and I am interacting with number of users in India as may be prescribed, the sheer act of this systematic and continuous soliciting through digital means would result in a significant economic presence of the non-resident in India, regardless of the fact that the non-resident has a fixed place or a branch or has any other form of virtual projection in India. Now, I am a non-resident. I am engaged with some users in India. Let's say I cross that threshold which is prescribed, then it will be deemed that I have a significant economic presence in India. Now, scenario one could be where I am making goods, services, or property available, including provision of download of data or software in India. Now, in this particular situation, also this activity would yield a significant economic presence in India. The provisions also provide that the said transaction would constitute a significant economic presence, regardless of the fact that the agreement for such transaction or activity is entered in India, the non-resident has a residence or a place of business in India, or whether the fact that the non-resident renders these services in India. So pretty much defying the rules of boundaries, defying the rules of classical concept of having a place of business or a fixed place of business, or the fact that services are provided in India. The place of rendition of service is not important. Whether I have a fixed place is not important. Whether the agreement for such transaction is entered into India is also not important. The sheer fact that I indulge in such transactions which have been identified would yield a significant economic presence, thereby constituting a business connection in India. Now, this definition or this concept introduced by virtue of explanation 2 capital A was effective 1st of April 2019, but because of the relevant threshold, they were never activated. Now, certain changes in the whole concept of ACP were made by Finance Act 2020, and the provisions which were introduced by Finance Act 2020 in the form of a new explanation to capital A stands deferred to assessment year beginning 1st April 2022. So next slide, please. If you look at next slide, can we turn to the next slide, please? Next slide, please. So explanation to capital A, as I said, was earlier introduced by the Finance Act 2018 and stands omitted by virtue of another version of explanation 2A which has been introduced. In fact, instead of saying proposed, we should have said existing or it's not proposed. In fact, it has been legislated. So it should be the explanation as introduced by Finance Act 2020 and the earlier explanation two-way. So I think we should read the word proposed by as introduced by Finance Act 2020. Now, what has happened? If you look at the comparison between the two explanations, and we've tried to give you a color coordination in terms of what has got changed. So, to begin with, in the first sentence, instead of the word clarified, the word declared has been given. If you come to clause A, a little below, it says transaction in respect of goods and services or any property carried out by a non-resident in India. Instead of by a non-resident in India, it says carried out by a non-resident with any person in India. So the scope has been widened. Earlier, it was conceived that non-resident should transact in India. Now, non-resident can transact with any person in India. So he need not himself transact. If he is transacting with any person, that is sufficient enough to constitute a significant economic presence. See the careful difference. Earlier, the phrase was non-resident has to transact in India. Now, non-resident has to transact with any person, right? Then coming to clause B, which reads systematic and continuous soliciting of business activities in engaging in interaction with such number of users as may be provided in India through digital means. Now it says with such number of users in India as may be prescribed. So the digital means has been taken away. So that itself suggests the fact that the scope of explanation 2A, which deals with the concept of constitution of significant economic presence, is no more confined to any digital activities only, because through digital means has been done away with. Systematic and continuous soliciting of business activities or engaging in interaction with such number of users in India is sufficient. So this is what it is. Let's fine tune our understanding of the comparison between the earlier existing definition provided by virtue of 2A with the present 2A. Next slide, please. Shruti, could we just hurriedly change the slides? Yeah, that's better. So let's look at the earlier explanation and the present explanation. Now the scope has become wide. It does not require the activities to be carried out in India. As long as the customer in India, all goods, exports of goods and services made by non-resident are covered. There's only a thin line of territorial nexus, which is customer in India. Then in clause B, as we just discussed, we find that the scope has been expanded by omitting the word in India through digital means, and also the fact that we find that on a comparison that with such the users which have been provided do state the fact that soliciting of business activities is in India is replaced with soliciting and activities with such number of users in India. So actual soliciting or engaging may take place outside India as long as users are in India. Earlier, soliciting of business and engaging had to be in India. Now there could be a situation where I may end up soliciting outside India, although the user is still present in India. So therefore, again, the territorial boundaries have got blurred in the sense that the scope has been enlarged to the extent that it need not be circumscribed to India. If you all remember in our last session, the first part session, we did describe on the fact that two of the fundamentals of pillars of taxation would be source and nexus, and how the source here is being blurred and the rules of nexus are being rewritten uh, to the extent of making it as wide as possible, please. Yeah, next slide, please. Now, the new norms of profit attribution, if we look at, we find explanation 3A, which has been provided. My apologies, there is a typo in the separator slide. It should be new norms of profit attribution. The word attribution is missing. Now, explanation 3 capital A provides, and it states that for removal of doubts, it is hereby declared that the income attributable shall include income from such advertisements which targets a customer who resides in India or customers who accesses the advertisement through IP addresses located in India. Now, suppose I'm traveling abroad and I'm using my Indian IP address, and such advertisements are being accessed abroad, then these advertisements shall be deemed for the purposes of explanation 3A, because these have been accessed through the Indian IP address. Explanation 3A further states that the income attributable to operations in India shall also include income from sale of data collected from a person who resides in India or from a person who uses IP addresses located in India. Now, sale of data collected from a person who resides in India. Now, if I have collected data from a person who is residing in India, then this activity shall also be regarded as generating income from operations carried out in India. Thirdly, sale of goods or services using data collected from person who resides in India or from a person who uses an internet protocol address located in India. So if some sales of goods have or services have been made while using the data collected from a person who resides in India, then that particular income which is attributable shall also include such income. Now, there is a very important proviso which is there. It says that the provisions contained in this explanation shall also apply to income attributable or transactions or activities referred to in 2 capital A. We just saw what 2 capital A suggested. So, therefore, all these activities from where the income is from where the income earning activities are taking place, from all these income earning activities, if there is an income which does take place, then that particular income will be attributable for Indian tax purposes, and regardless of the fact that again, regardless of the fact that let's move to the next slide, please. Regardless of the fact that I have presence in India or not. So, what is the takeaway from explanation 3A? The above deeming provisions enhance the scope of attribution. However, the practical application could be challenged, and some of the concerns are: there is already an equalization levy which is applied on online advertisement income of income earned by non-resident which does not have a P in India, and such incomes are correspondingly exempt for Indian income tax purposes. So the question would arise that if we already have an EL in place and after equalization levy has been placed, that particular income is not included for Indian income tax purposes, how would 3A would have an interplay with equalization levy? And Secondly, how do you track the usage of the IP addresses and therefore determine the nexus and the attributable income to Indian operations? Thirdly, how do you track the collection of data from person in India? Uh, Now, whether the intention is to include only cases where there is a direct connection with the data collected, or indirect means of data collection. Let's say I have collected the data, but I have sold it to a non-resident, and that non-resident is in the business of aggregating data and further sells it to the actual consumer of the data. So I am an Indian data, I collect Indian data, let's say I'm a non-resident, and I in turn sell the same data to another intermediary who is also in the business of buying data, not for self-use or for my own business, but I'm in the business of buying and selling data, let's say. Now I in turn sell data to the actual consumer of the data who is also non-resident. Now the question is how 3A would come into force. Is 3A applicable on the intermediary, or 3A is applicable on the actual consumer of the data? Then the next issue is with regard to Article 7. Given the situation that I may or may not have, if I have a PE in India, then Article 7 comes into picture, and how these profit attribution rules would work in situations of invocation of Article 7 of business profits for the purpose of determining income in the hands of the PE. So there is a fair bit of overlap. This is what Mr. Garg also said in his opening comment also, amongst the various provisions of the domestic tax law and once read with the treaty. Now, 3A deals with profit attribution. It is a provision under the domestic tax law. It does not impact treaty, but the sheer fact that Article 7 of taxation of business profit will take you back to the domestic tax law of the source country, and therefore to that extent, while you compute the income under the domestic tax law of source country, how the attribution rules of the source country, and here let's say the case in point is India, how explanation 3A would have a role or play in terms of determining the profits attributable to permanent establishment. As I speak with you, we all understand that Section 295 of the Income Tax Act also has got amended. Now, 295 gives powers for the purposes of rule making, and those particular provisions have been amended so as to take care of the situations which we are currently dealing. And that is precisely the reason you've also found in 2019 a draft rule with regard to profit attribution was circulated by the Central Board of Direct Taxes. I also had the pleasure of making comments to the same, but still there is no formal guidance, and everybody is looking at whether there could be a global consensus with regard to the same, and that's something which we've already discussed in our prior section on 22nd, the most recent being the OECD's unified approach pillar 1 and the UN response or a UN prescription in terms of introducing Article 12 capital B in the tax treaty. While we look at or consider explanation 3A, or we are dealing with the aspects of e-commerce taxation, let us not rule sight of the characterization aspect, which are so pervasive in this entire discussion of e-commerce as to the income earned or what is the character of the income. And therefore, it is imperative not to be oblivious of the royalty provisions which are there in the domestic tax law in section 916, which we all understand was amended in 2012, also merits a consideration. So next slide just helps you in refreshing yourselves in terms of looking at what what the royalty provisions are which currently stand in the statute book. Yeah, next slide, please. Next slide, Shruti. Yeah. So amendments in royalty definition were made in Finance Act 2012, although it will be always remembered as the year of the Vodafone Amendment 2012. But 2012 also resulted in amendments to the royalty definition also. And the impact of the amendment which was made in 2012, that the amended definition clarified that transfer of all or any rights, regardless of the medium through which such right is transferred, is regarded as royalty. Royalty includes and always has included the aspects with pertaining to possession or control of such rights, the location of such right, and such right or property is used directly by the payer. So royalty includes and regardless of the fact that whether such right or information is with the payer, regardless of the fact that it is used by the payer, or regardless of the fact that the location or property information is in India. And the process also includes the transmission of satellite amplification. This we all understand is to overcome the decision of the satellite companies, which we had in the case of Panamsat, AsiaSat, etc. The point I'm trying to make is that when you look at the income derived through e-commerce activity, it might very well happen that certain income may get characterized as royalties, and therefore, uh, unless and until tax treaty provides a narrower definition, and therefore a concessional treatment can be taken away, taken from the tax treaty, we should not lose sight of the royalty definition. Now, 2012 definition was again done to expand the source base, and we all understand that the issue of copyrighted article is still not. And I'm making in a very simplified manner. I mean, we know that the Karnataka High Court decision conflicts with the other favorable decisions by other high courts, and therefore the matter will only get settled once the Supreme Court gives its verdict. So therefore, the intention is to see that how much we can expand the source-based taxation. Now, whether we do it by expanding the definitions of royalty and other definitions in the domestic tax law, or by bringing it new concepts like significant economic present, or we bring it new themes of profit attribution in terms of introduction of capital 3A explanation, or we introduce a new levy altogether, which is equalization levy, which we will discuss shortly, or we further widen the tax base by introducing new TDS provisions, which we precisely find by virtue of introduction of section 194 capital O, which was introduced in the Income Tax Act as recently as Finance Act 20. So let's move on to looking at 194O. Very interesting. I mean, again, a fair bit of overlap which we may find with the equalization levy provision, but worth consideration. Yeah, next slide, please. So this is a very nice sort of a descriptive slide which helps us in understanding the entire e-commerce transaction and how provisions of domestic tax law have been further widened to include such a transaction for tax deduction purposes. So let's say there is an e-commerce operator, any platform or any aggregator or a marketplace you could consider, and we have an e-commerce participant. Let's say a particular company places its products on that platform. You want to sell a ketchup, groceries, etc. I mean, could be anything, right? And you are making those sales of either goods or providing services by virtue of getting facilitated through the platform. So let's say the buyer places the order for requisitioning of such goods or services on that platform, and uh, payments are made, and as a result thereof, those goods or services are provided to the buyer, right? Now, for the purposes of 194O, e-commerce means supply of goods or service or both, including digital products over digital or electronic network. Fair enough. Uh, Remember, this is the definition for 194O. So when you are looking at perhaps equalization levy and you find similar phrases, try and figure out the definition for that particular scheme, because this only relates to 194O. Now, who's an operator? Operator means a person who owns, operates, or manages digital or electronic facility. I need not own it. I can always operate a platform which I am not owning it, or I may be just managing it. I'm just in the I'm responsible enough to manage a platform which I may not own it, or I may not be operating it all by myself. I'm just managing a part of it. In that situation, I could be regarded as a ECO. And who is a ECP, e-commerce participant, means any resident in India. No, remember, this is applicable to a resident participant. If I'm a non-resident, then 194O is not applicable, because then probably EL might come into force. Yeah. Now, e-commerce participant means a resident uh, selling goods or providing services or both, including digital products through digital or electronic facility, and services includes fee for technical services and professional services as defined in explanation to section 194J. Here a issue comes up whether these services are only these two kinds of services, or there could be other services also. One school of thought is that services includes only FTS and professional services. So these are the only two services which could form part of the definition of services for the purpose of 194O. The other school of thought is that it's an inclusive definition. So all services, including services which are in the nature of FTS or professional services, would be included for the purposes of definition of services. I think the latter is a better view. To say that services only comprise of FTS and professional services may not be the right. Can we close this dialog box, please? May not be the right interpretation, because then the draftsman would have used the language means and includes, but here it is just inclusive. Now, e-commerce operator shall be deemed to be the person responsible for paying to the e-commerce participant, regardless of the fact that whether he makes the payment, regardless of the fact that whether he is involved in the payment process. If you look at the second asterisk, it says that any payment made by a purchaser directly to a participant shall also be deemed to be amount credited or paid by the operator to the participant. Now, there are certain thresholds which have been provided. If the participant is an individual or HUF and the amounts of sale are less than 5 lakhs and you have provided your Aadhaar or PAN, then there is no TDS. Otherwise, you are talking of TDS at the rate of 5% if you do not have PAN. Now, this is another deterrent of not having PAN apart from 206 AA situation. So, no TDS if you are an individual or HUF and your sales are less than 5 lakhs. This is to alleviate situations of small participants who are not making huge turnovers but still are in the tax net in terms of having a Aadhaar or a PAN, right? Also, there is no TDS if there is no TDS under the other provisions relatable to TDS, if TDS under 194O does take place. So, in other words, if there is an incidence of TDS under 194O, then no other TDS provision would come into service. So, you can't have two TDS provisions taking place simultaneously. You can't have two TDS incidences taking place. And 194O has been regarded as a provision which shall precede over the other TDS provisions, assuming that the transactions do qualify any other TDS provision. Next slide, please. Yeah. So what's the purpose of section? I mean, if you look at the broad purpose, there was no TDS on e-commerce participants' payments. Therefore, many e-commerce participants were outside the tax net, and the purpose is to widen the tax base. Exceptions we've already discussed. 5 lakhs is one situation. And the non-resident e-commerce participants are exempt in such situations. The TDS rate is 1%, but if you do not have Aadhaar or PAN, then it could be 5%, right? Now, in this regard, I would also draw your attention to the guidelines or the clarifications which came via circular number 17, dated 29th of September 2020, where certain clarifications have been given by the CBDT, which merit consideration. The clarifications are given with respect to the aggregator services pertaining to insurance, and then you have on payment gateways also. So if there are any specific queries with regard to the clarifications forthcoming on 29th of September 2020, we could consider that also if we get some time for Q&A. One of the important clarifications which was forthcoming by this 29th of September 2020 circular 17 was that since the threshold of 5 lakhs for individual and HUF who has furnished PAN is with regard to the previous year, the calculation of the amount of sale or service for 194O shall be counted from 1st April. And therefore, if the gross amount of sale or service, including the period up to 30th September, in relation to such individual exceeds 5 lakhs, the provision of 194 shall apply on such sums which are credited after 1st October 2020. We all understand that 194O comes into effect from 1st April 2020. 20. So this is one important clarification with regard to 194O. Then the other clarification was that the payment gateway will not be required to deduct tax under 194 on a transaction if the tax has been deducted by the e-commerce operator under 194 or O of the Act on the same transaction. Now, if the operator has done it, then the payment gateway, Pine Labs or other payment gateways or banks, etc., are there. Then a dual levy of TDS will not take place. In this regard, the clarification suggests that some sort of an undertaking can be obtained regarding deduction of tax. So these are a couple of clarifications apart from one clarification which deals with the insurance company aggregator. 1st October is the date. We all are aware of it, and now pretty much it's been almost 3 months since this has come into force. Yeah, let's move on, please. Yeah, so one of the other multiple situation of taxation of digital economy taxation has been with regard to the OIDR services. To understand what the OIDR services are, let's look at these few slides which have been sketched by my colleague Sarthak, who deals with indirect taxes. I'll try and be very quick on this. So what is the meaning of OIDR services? If you look at the IGST Act, Section 2, Subsection 17, next slide, please. So OIDR services were introduced, as I said, by 2017 IGST Act, and it again is an inclusive definition. Services whose delivery is mediated by information technology over internet, and these are automated supplies involving minimal human intervention. So, and which are such services? These have been defined: advertising, cloud services, online gaming, digital data, etc. So there is a taxation regime under indirect tax dealing with e-commerce already in the form of YDR services. Next slide, please. So in terms of the supply rules for goods under Section 10 and 11 deals with goods, and 12 and 13 deal with services. Now, as per Section 13, the place of supply of OIDR services shall be the location of the recipient of the service. And explanation to the provision states that when a person receiving such service shall be deemed to be located in the such in such taxable territory. So the location of the recipient shall be deemed to be the place of supply of such services. The explanation further states that person receiving such services shall deem to be located in the taxable territory if following two of the non-contradictory conditions are fulfilled. Now, which are those conditions? They are stated in the next slide, please. So these are, if any of the two following non-contradictory conditions are satisfied. You have the location, you have the credit billing address, you have the IP address, you have country code, etc. Now, assuming that this is all done, and there are fair bit bit of compliances which are envisioned. Uh, the supplier of the OIDR services shall obtain a registration under the simplified registration process, and then he has to file returns in form 5A, which are there in the next two slides, please. So let's quickly skip through the next two slides because we need to cover more. If there are some queries in and around this, I will ask. I can always ask my colleague to assist on these aspect. The intention of adding these slides of OIDR services is just to convey or apprise the participants that there is a fair bit of onslaught on digital economy by ensuring or adding all or multiple kinds of taxation. We've looked at the provisions under the domestic tax law. We've looked at the new provisions dealing with the widening the TDS base by introduction of 194O effective 1st October 2020. We've looked at the 2017 introduction with regard to OIDR services. And now we shall move on to the last segment of our presentation dealing with the unilateral levy of equalization levy, which was introduced by the Finance Act 2016. Yeah. So let's move on, please. So this is GSTR 5A, which I was just highlighting with regard to the compliances to be done with regard to OIDR services. Yeah, next slide, please. So, what has been the background with regard to equalization levy? Again, we go back to the 2016 Committee of E-commerce Taxation, which had recommended an equalization levy ranging between 6 to 8%. And again, it was emphasized that the present rules relating to nexus and characterization of income will not only yield a lot of tax disputes, but at the same time, the way the treaties are worded, the taxing rights are not allocated to the source jurisdiction. And one can say that the levy was brought in as a reaction to, or as an outcome, if reaction is not a good word, the Action Plan 1 recommendations dealing with challenges of digital economy. It was also highlighted that there is a lack of neutrality between foreign companies and Indian companies, and and there could be distortion which can impact the market competition. You have the Indian companies rendering such similar activity specified services which may be paying taxes, and the foreign companies are not paying taxes, and therefore there could be a distortion which could impact the domestic company. It's not really a protectionism. One should not say that this has a fairly protectionism in, but this could be a matter of fact. You know, you have a non-resident who is not taxed in India for want of a business presence, and you have an Indian company rendering the same service is being taxed. So this is sort of a mitigating reverse non-discrimination where the Indian company is adversely pitted in terms of tax consequences vis-a-vis a foreign entity. Yeah, next slide, please. Yeah, can we move to next slide, please? So 2016 introduces by notification dated May 27, 2016, a equalization levy of 6%, popularly known as Google tax on online provision of advertisement space and other related services. So the scope was clearly identified as what is the scope of equalization levy in 2016? Only on online advertisement and provision of advertising space and such related services which were identified. So it's not that all and every activity of non-resident e-commerce player was subject matter of EL. Only certain specified services were included as part of EL. As I said, not part of Income Tax Act was enacted as a separate chapter Roman 8 to Finance Act. Section 1050 was introduced, giving a corollary exemption to income tax on income which is chargeable to EL. And 40A IB was inserted, disallowing expenses on account of non-deduction of EL. Now, 2016, certain specified services, 6%, 2020, 2% equalization levy on e-commerce transactions which were identified, right? And again, corresponding amendments were made in section 1015. 2020 e-commerce services EL comes into picture from 1st April 2020. In fact, if you were to ask, considering that the budget was passed in March, companies which did fall within the ambit of equalization levy 2020 had very little time to comply with the provisions of EL, because this was introduced in effective from 1st April 2020 and was introduced by way of an amendment to Finance Bill 2020. So you have specified service EL 1.0 2016 version. You have EL 2.0 2020 dealing with those e-commerce related services which were different from specified services. So let's look at this levy in a little more detail. Next slide, please. So let's first look at the 2016 levy. The equalization levy was introduced from 1st June 2016 on some specified service, as I said, provided by non-resident on the recommendations of the committee at the rate of 6%. Consideration for any specified service received or receivable by a person from person resident in India or a non-resident having a permanent establishment in India. Certain services which were specified, provided by non-resident to residents which were carrying on business and profession in India, or to other non-residents which had a permanent establishment in India. Such equalization levy shall not be charged where the non-resident had a permanent establishment in India and the specified service is effectively connected with permanent establishment. Because if you are a non-resident providing such specified services through a permanent establishment and such services are connected with permanent establishment, then of course you are going to pay taxes under the domestic tax law of India, and therefore to that extent EL is kept out. Threshold of 1 lakh has been provided, or where the specified service is not for the purpose of carrying out any business or profession in India, then in that case EL will not be applicable. So where the payment for specified service by a person resident in India or by a permanent establishment is not for the purpose of carrying out any business or profession in India, then EL will not be applicable. So these are certain salient features of the EL which was introduced on specified services in 2016, chargeable at the rate of 6%. Next slide, please. Next slide, please. Shruti. Yeah, next slide, please. Yes, thank you. So non-compliances, you have an interest of 1%, then you have penalty, uh, and how much amount of equalization levy we are talking about. If just to give you a comparison, if you look at Google's revenue from India in 2014-15 were to the tune of about 4,000 crores. So that gives you a sense of how much quantum we are talking. And similarly, Facebook's top line from India in 2014-15 was about over north of 100 crores. So this is the quantum or the tax impact of equalization levy. Yeah. Next slide, please. So the relevant provisions of Finance Act 2016 are the following. You have Section 164 and Section 165 of the Finance Act. Again, I'm repeating, these are not provisions of the Indian Income Tax Act. These are provisions of the Finance Act. Non-resident not having a PE, rendering of specified services, resident in India carrying on business or profession, 6% of equalization levy on gross consideration, threshold of 1 lakh of rupees. Here specified service is defined as online advertisement and provision of digital advertisement space. And online means a facility or service or right or benefit that is obtained through internet. So these are the key definitions. Yes. Next slide, please. So what would have precipitated this? We understand that the famous Calcutta Tribunal decision in Wright Florist, and you had decision of Yahoo and couple of other decisions, which did suggest the fact that if the income did not characterized or as income falling under a source-based provision of withholding tax, then and it was characterized as business profit, and in the absence of non-PE status, it would not be chargeable to tax. This is precisely what the judgment of Yahoo and Rights Florist had. And similarly, you have the pragmatic judgment in uh, much like in the case of Yahoo. Yeah. Next slide, please. Now, a major issue which was pointed out by the Task Force on Digital Economy by the OECD, that most countries, including India, have a situations where treaties, to the extent they provide a beneficial treatment, should be read in precedence over the domestic tax law, and it becomes an issue under the domestic tax law. Now, treaties have to be interpreted in good faith. We all understand that is the Vienna Convention ethos is all about. The unilateral initiative of coming up with equalization levy would have its fair share of criticism. Article 18 of the convention says that a state party must refrain from acts that defeat the very purpose. And similarly, Article 27 is more explicit in stating that a party may not invoke the provisions of its internal law as its justification to failure to perform a treaty. Now, either the treaties would have got amended, uh, which is the likely mantle or the likely turn of events which may fall soon, and treaties may be amended through a second version of multilateral instrument through a global consensus approach. Then in that case, these unilateral measures will not be required, and that's precisely has been the reason Deotre, or for that matter, the justification given by revenue authorities, that these are temporary measures, and therefore, once there is a basis of taxing such income well laid out under the scheme of the Act, read with treaties, maybe these unilateral levies would be taken away. But the red herring is that something which becomes almost permanent is seldom taken away because it adds to the revenue augmentation exercise. I mean, by the time the global consensus will happen, will be a few years down the line, and almost 10 years would have been elapsed since introduction of equalization levy. And the question is that will at that particular point in time the government will roll back EL. Anyway, the time will tell. Let's move on to the next slide, please. As we've already discussed, you have the OIDR services which are taxed at 18%, and the obligation is on the non-resident service provider facilitating such B2C supplies. The new levy runs parallel to OIDR and would eventually increase the consumption cost because at the end of the day, the taxes will be passed on to the consumer itself. Yeah. So yeah, next slide, please. Now, what happens in 2020? We, apart from the specified service, we have the e-commerce supply or service, which pretty much expand the scope of equalization levy. And e-commerce supply or service is defined under Section 164, Clause CB of the Finance Act 2020. So this is a quick comparison between the provisions of 2016 when the levy was introduced and the levy as it currently stands. So very quickly, in 2016, you had certain specified service. Now you have e-commerce services and supply, which are included as part of the expanded scope of EL. Uh, what is e-commerce? What is the expanded definition of e-commerce supply or service? Would include online sale of goods by the non-resident e-commerce company. Would also include online provision of services provided by non-resident e-commerce operator. You have online sale of goods or provision of service or both, or any combination of activities listed before. So in 2016, if you look at the second row and the second column, you find only specified services which are online advertisement services. But now you have e-commerce supply or services. Uh, the rate of levy of EL on e-commerce supply and service is 2%, and whereas the rate of equalization levy on specified services is 6%. Uh, so this is a quick comparison. Continuing with the comparison, you have the next slide, which lays out the scope and comparison of the 2016 and the 2020 version. Yeah, next slide, please. Now, who is responsible for compliance? No, just go back. Shruti, please go back. Yeah, go back. We'll come to this. Yeah. So, who's person responsible in the case of e-commerce supply or service? It's the non-resident e-commerce operator. Similarly, the way you had the e-commerce operator under 194.0. But as I said, please look at the definitions very, very carefully. EL is not applicable in situations where you do not have a PE in India. So, and the threshold for 2016 levy was 1 lakh. Now it is the levy in the 2020 version is 20 million, and correspondingly the income would be exempt. Yeah, let's move on to the next slide, please. Now, let us look at the 2020 version a little more carefully. Equalization levy shall be levied at 2% on the consideration received or receivable by e-commerce operator from e-commerce supply or services. So you have a person resident in India, or you're a person resident in India who's non-resident and undertakes the following two activities, or the person who buys using the IP address. So you have an e-commerce operator who owns or operates a platform for online sale of goods or online provision of service, and that's one vertical. Or you are in the business of supplying services or online goods. Then in that case, EL would be applicable. Yeah. Next slide, please. So scope and coverage, we are talking about non-resident e-commerce operator. E-commerce operator is defined. Definition of e-commerce supply or service is the following category of activities, and which are those specified services on which equalization levy applies. So you have online sale of goods, you have online provision of services, you have sale of advertisements, you have any combination of online sale of goods and provision of services, and or both, and you have sale of data from an Indian resident, sale of data collected from an Indian resident or from a person who uses IP addresses in India. So these are the key broad contours as to what are those e-commerce transactions which are covered under the expanded version of equalization levy. Yeah. Next slide, please. So, who's the service recipient? A person resident in India, a person who buys goods and service using IP address located in India, any non-resident in respect of sale of advertisement which targets Indian customer, any non-resident to whom data is sold which is collected from an Indian resident or from a person who uses IP addresses in India. The rate is 2%, and exemption is in situations where you have a PE in India and these activities are effectively connected, or there's a threshold of 2 crores of rupees, and the current provisions are applicable in effect from transactions entered into 2021 for exemption of income tax, which is disconnect. Since the levy has been introduced in 2020 itself, the exemption of for income tax purposes should also be 2020. I think there's a little anomaly which will get clarified. The intention is that if the income has been subject to tax by virtue of EL, the same should not be taxed under the normal provisions of the Income Tax Act. And EL 2.0, the expanded levy of equalization on e-commerce supply and services, has been introduced since 1st April 2020. Therefore, the corresponding exemption should also be from 1st April 2020. So to that extent, this is a little anomaly. What is the industry impact of the equalization levy? Let's look at the next slide, please. So you have the marketplace aggregators who will be affected. You have the retail which gets affected, media and entertainment gets affected, education gets affected. The levy applies to an e-commerce operator, which can potentially include not only e-commerce marketplace, but also businesses which operate under the brick or mortar with a fair share of digitization. Now, I may have concluded a transaction over a marketplace, but there is a physical delivery being done, uh, or the transaction is done offline, whether it will get covered in equalization levy. And similarly, there are many vexed questions around it. So, what are the key considerations regarding equalization levy? Let's look at that very quickly as time is running short. What are the practical issues and challenges? The next slide, please. So these are certain challenges: to whom it is applicable, who should be constituted as an operator, what constitutes digital or electronic facility, whether advisory services rendered by fellow chartered accountants will also be covered in this, uh, applicability of intercompany transactions, reseller arrangements, applicability in case where services are ordered, booked online but are delivered offline, say hotel services, etc. Uh, Interplay with indirect taxes, whether the equalization levy is creditable in the home jurisdiction of the non-resident upon whom such levy is being foisted. The income tax mismatch we've already discussed. What if there's only one-off transaction? A non-resident has come into India, he uses an IP address. Let's say he places an order using the IP address of a hotel where he is staying, and these goods shall be these goods are purchased online and shall be shipped to his overseas address. Just because he uses an IP address, will it be a fit case for equalization levy? And then, apart from these practical challenges, I thought there is a fair bit of concern with regard to whether this levy is constitutionally valid also or not. So let's look at the next slide, please. Next slide, please. So the Committee on E-commerce Taxation did identify this particular issue, and I think they took clue from the imposition of service tax, which came in 1994. And as per the committee, the Parliament derives its power to tax e-commerce from entry 92 capital C, which is taxes on services, and entry 97. Now, the Parliament could not have derived power from 92 capital C because it was never notified. Now, also, it cannot be said that Parliament has derived power to levy equalization levy from 97 because it says any other matter not enumerated in list 2 or 3. Now, we all understand list 2 or 3 deal with concurrent and state list. So clearly this equalization levy aims to tax digital services facilitated by non-resident. Now, if they are already covered in the scope of GST, then why should a levy be introduced? And Article 246 capital A of Constitution deals with the power of central or state government to make laws in respect of GST. And if they are covered under OIDR services, then is there a case of legislative competence of imposition of equalization levy? It would be interesting to see if there is a challenge on the constitutional validity of imposition of equalization levy on the aspect of legislative competence. Yeah, next slide, please. Next slide, please. So, the constitutional pundits can analyze that if there is already an OIDR service, then is it right to justify legislative competence through entry 97 of list 1? Now, it may also be contested that Parliament derives its power to equalization levy from entry 82 of list 1 of 7 schedule, because the said list covers taxes on income other than agriculture income. However, as stated above, it is not a tax on income. So therefore, again, can it be said that entry 82 was rightly pressed into service? So as we try and sum up the whole discussion on various facets of new initiatives or recent initiatives taken with regard to taxation of digital economy, especially in the Indian tax landscape and the regime. The intention in today's interaction was just to provide a very quick overview, or rather an elementary view of what the provisions are. And for those of you who are experts, it might have been good refresher. And for those of you who are trying to lay hands on what it is all about, the intention was to give a compendium or a condensed view of the various provisions. By no means this is an end to the discussion. Next slide, please. Because there are so many controversies, there are blurring lines between various provisions which we have discussed. The whole issue of extraterritorial application with regard to pushing the boundaries on Section 9, the interplay of equalization levy with other facets of income characterization, such as fee for technical services, various interpretations within the given scheme of each of these initiatives, various schools of thoughts on various kinds of permutation combinations and various business models. So if you were to ask me, we can spend endless hours only in discussing amendments to Section 9. Similarly, we can look at various instances as to how the challenges under equalization levy are there in terms of interpreting it. Similarly, issues with regard to 194O. So each segment in itself can be discussed. And let's not forget, we are only discussing the amendments in the domestic tax law. Now, what will happen to the world of tax treaties and international tax, especially with the already implemented multilateral instrument provision and the future of the debate on e-commerce taxation? Will it result in another form of multilateral instrument? So all these things, Article 7, 13 of MLI, etc. So the whole world is rebooting itself insofar as taxation of cross-border income and services, uh, whilst e-commerce and digital taxation will assume a center stage. There is a fair bit of doubt as to unintended consequences on the conventional business. And if e-commerce business will be pursued, then why conventional business should not be pursued? So, uh, whether the existing rules are sufficient or insufficient, services and goods, always there will be a thin line of differentiation. We've seen in the indirect taxes the decisions where multiplicity of taxes was discussed with regard to provisions of goods and services. Then the whole concept of fairness and neutrality, whether you want taxes to promote businesses, whether the country of market, which we discussed elaborately in our last interaction, has right to tax. Classically, we've seen the source country and the resident country would share taxes, but now you have a country of market, the market jurisdictions. The treaty override the amendments in domestic tax law, and future developments in international tax policy, and the needs of a market jurisdiction and a fine balancing act. I mean, if the search engines derive uh, their utility or business proposition from market jurisdiction, then if they also have a right of fair share of taxation, then let's not forget that the enterprise is a resident of another country and is deriving income from maybe the country of market or another country. So whether this trinity will work, where a market jurisdiction also has a right, the country of residence also has a right, or a country of source also has a right, how much uh, tax be distributed. So all these things require a great deal of deliberation. With this, I rest today's discussion. As I said, it was just a quick overview or a curtain raiser sort of a presentation. There are a lot of controversies, there are a lot of issues, there are a lot of points for interpretation and deliberations. And I think in times to come, we may get an opportunity to discuss the same. With this, I'll hand it over back to Mr. Garg and Mr. Chawla. And thank you, Shruti, for your help all this while. Raji, Mr. Garg, if you could take it over from here, and I also express my acknowledgement for my colleagues Pulkit and Sarthak for their valuable contribution and last minute assistance. And of course, season's greetings and a very happy new year. With this, hand it over to Raji.
Thank you, C. Aseem Chawla ji, for a wonderful deliberation on this very new topic. and international taxation. So I am thankful to you, and I am also thankful to all the members attending this our webinar. Thanks to all. Thank you very much. Thank you, sir.